Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. With virtually no domestic economic indicators for this week, the Australian dollar traders will look to the US and trade talks as fresh round of high-level tariff negotiations between Beijing and Washington are scheduled to begin later in this week. From a technical point, though, we got the break of 67.55 but failed to generate any renewed buying traction. And from that, the market has again failed from yesterday and now looking back towards the downside. If we see a break of 67.05, this should trigger a further round of weakness. But I feel this time, after 5 consecutive attempts of the level of 66.70.80, may fail and actually expose the region of 65.40.60. So I am still bearish. Technically, it's still negative. So therefore, I do expect to see further weakness into this week. The euro took a challenge to the upside on Friday with the US non-farm payrolls coming out. Not too disappointing. On Friday, the US Bureau of Labor Statistics reported that the number came in at 136,000, just missing the 145,000 forecast. What was interesting, though, is the unemployment rate has dropped to a 50-year low, or around December 1969, of 3.5%. The market did stage a brief rally to the top side, but was contained clearly from this downtrend, which comes in around 110.10.30. I do believe the market could easily stage another down test towards 109.60, or maybe to the objective of 108.65. Even if we do get a break to the upside, there is still a lot of hurdles to clear and a lot of supply or resistance up towards 111. Since the rejection of 108, the market is somewhat trying to recover. And in front of that level of 106.10, even though 106.60 was crushed. From a technical point, the bulls aren't really in a position to take the market higher. So I'd still believe the market could break down further and look towards 106.10 this week. The British pound, since rejecting 124 figure 25, has failed to sustain or even come through with any bullish traction, and from the technical pattern is breaking down. We could see further weakness into this week. Now a break of 122.35, which is only about 50 points away, would expose further weakness towards 121.70, but a place I believe where the bulls are hibernating to the fact of could see a rejection again. A very mixed pattern when it comes to the gold. We got a break to the downside and then a break to the upside, and now pressuring again this level of 1,488. If this level was taken out or close under New York tomorrow morning, then I'd rather sit out for the moment, because the direction is so choppy and it's very hard to put a position on. The only one saviour to the bullish case is the fact is there is bullish divergence clearly seen from these 2 points to this 2 points. So therefore we could still see a rejection from this region and up towards 1,540 at least. Wrapping up with oil, well, the fact is we got a dragonfly and now we got a rejection from the 53 break overnight. Therefore could still see a further test up, even though we did fail to the top side. But technically I still like the pattern, so I still believe the market is bullish and looks towards a target at this stage in time to the region of 55 to 56 as a measured move. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new day.